In this coronavirus stock market rally, the odds are stacking up either for another bull run or a stock market crash. The U.S. stock market rally has posted several record highs this year, and the warning signs are now flashing. So, let's see if the bubble will burst for U stocks or if the major stock indices like the Dow Jones Industrial Average, the S&P 500 Index, and the NasdaqNDAQwill will continue to run higher. When we use the term stock market, it usually refers to the S&P 500 index. The S&P 500 index doesn't represent the whole of the U.S. stock market, it represents the largest 500 American stocks. So, when one hears the word stock market in the media, it is loosely referencing the S&P 500 index's performance. It is imperative to keep in mind that the S&P 500 index's performance this year isn't a true reflection of the U.S. economy. That's because, since the coronavirus stock market crash, which formed a trough in March this year, the tech sector has been leading the gains for the S&P 500 index. Only recently we have started to see some sector rotation. Sectors like materials, industrials and energy have seen some life breathed back into them this week. The financial sector still needs more prayers, while the hospitality industry is desperately waiting for a coronavirus vaccine. When it comes to the U.S. stock market, we have three major stock indices: the S&P 500, the Dow Jones Industrial Average, and the Nasdaq Composite Index. So far, the S&P 500 index is up 10.84% year-to-date YTD, the Dow Jones is up 2% YTD, and the Nasdaq is up 39% YTD. One can see that the Nasdaq index has been the leading index, while the Dow Jones has been the biggest drag for the coronavirus stock market rally. Given the Nasdaq index's performance, it is natural to think that there could be a bubble forming and that the Nasdaq might crash. Let's explore this a bit more. Both the Nasdaq and S&P 500 indices are trading well away from their 50-day price average, a general price level that is closely watched among technical analysts. The S&P 500 index's price is nearly 10% away from its 50-day simple moving average (SMA), while the Nasdaq's price is trading nearly 11% above its 50-day SMA. Historically speaking, the S&P 500 index usually sees its bubble burst when the price is away from its mean. We witnessed this most recently in June. The chart below shows the red rectangle displaying the stock crash for the S&P 500 and the Nasdaq. A similar event is now imminent, and this can happen if tech stocks continue to sell off. On Thursday, before the stock market opened, we saw most of the tech stocks selling off. This could be just because traders want to take some profit off the table. However, if we see some upward momentum slowing from tech stocks, they will pull the S&P 500 index lower as well. The stock market bubble can continue to soar for some time for a number of reasons. Firstly, as mentioned in an earlier article, the U.S.